I'm Charlotte McLeod with investingnews.com, and here today with me is David Morgan, publisher of the Morgan Report. Thank you so much for joining me. Great to have you on as always.
Well, Charlotte, it's great to be back. Thank you.
Really good to be catching up with you. And when I was getting ready for this interview, I looked back and I saw that our last conversation was actually back in March. So it's been a little while. When we were talking at that time, I think it was around the first time this year that gold passed 2000. And we've seen it do it a number of times in 2023. It's currently above 2000 as we speak right now. So where I thought we could start is with the most important drivers for gold that you're seeing at the moment.
Well, the most important drivers are economic uncertainty. And the biggest buyers, of course, are the central banks. It's been that way for last year, 2022. They set a record for, I think, the last 50 years. And they're on track to be a similar amount of gold gobbling again this year. Retail's been above average, I would think. I won't know until I see the data. But it's economic uncertainty, safe haven status. I'm surprised in a way, Charlotte, that it's not well beyond 2000 at this point. With all that's going on with the Ukraine war, what's going on in the Gaza Strip, Xi Jinping coming over and telling Biden what he needs to do, all the rest of it. But it is what it is. We know that the gold markets are basically derivatives markets, like all the commodities. The derivatives price are what we see. And of course, that does set the spot market. But we also know in some jurisdictions, such as the Shanghai exchange, they actually have a premium. So the market isn't all that we see. In other words, I still think gold's undervalued. It's hit it 3 times. We're up to the 4th time. Usually on the 4th try through a level, it holds it. I did an update for my subscribers because they wanted to know. It was very complimentary. One of my members said, David, I want to know if this is a breakout or a fake out. Last time, when it was a fake out, you said it was. The last time when it was a breakout, you said it was. So what is it this time? And I gave him the Morgan rule. We set a line that the gold has to achieve that price, above that price. Then it has to maintain it for 3 days in a row. And it also needs to be on above average volume. And if that occurs, then we are about 80% assured that it is a breakout. We'll see. I lean toward, unfortunately, I think it's going to come down again, but I could be wrong. And one last word, you didn't ask me, Charlotte, but a long-term spread trade on, which is short palladium and long platinum, and it's worked out just making me money while I sleep. Of course, I put it out to our paid members. And I thought at the time, and I said it was a bold statement, they shorted palladium at 2,400 the ounce. And now it's at about 1,000. And I said they get to par, that platinum and palladium would be the same price, and they're within $60 of each other right now on the bid side. So I'm going to try to pat myself on the back. It's just the way you can make money in commodities is not trade very often, find a big trend and stay with it for a long time. We'll have a coffee.
Okay, yeah, I think we have a couple of points that we can follow up on there. I want to stick with gold for a little bit. I like how you put it, is it a breakout or is it a fake out? And I was going to ask you how we can determine what's going on. I think you've explained what we need to see for gold to maintain and take that move higher. Going back to the theme of uncertainty that you were mentioning, there's so many things going on that we don't know how they're going to turn out. I think a lot of people are watching the U.S. economy right now. So that is a good one to touch on as we look toward 2024. People are wondering, are we going to get that soft landing? Are we going to get a recession? Or perhaps are we already in a recession? So I wondered if you can help us cut through some of that noise.
Absolutely. And thanks for just the direct questions. I mean, the real answer, we are in a recession. We've been in a recession. And by their metrics, but they changed their metrics to kind of try to fool some people. The point is that retail's been decimated. I mean, there's been more retail closures. I mean, Sears, for example, was like 100 years old, entity. Bed Bath and Beyond. I mean, I forget the number, something like, I looked it up. I just did an interview about a week ago. It was like 248 retail businesses either bankrupt or curtailed some of their operations. In other words, losing franchisees, close their shops. Many of the malls are empty. The mall by me is quite empty. The theater's there. The food court has about 3 restaurants instead of 7. And that's pervasive throughout. Credit card debt's at an all-time high. Commercial real estate is in a bubble, worse than the bubble of 2007, 2008. Things cost a lot more than the official inflation rate. A lot of the food banks are being pushed to their limits. Less food is being donated. More people, walked in and asked for some help at Thanksgiving than it's setting records. So we're in dire straits, if we want to be honest. But of course, the political class and the mainstream financial press will tell you, well, look at the GDP. The GDP is up. But the reason the GDP is up is because they borrow $4 to get $1 of growth in GDP. Boy, that's a real going concern. I mean, if you had to borrow $4 to make $1 every time someone bought a product on your shelf, you'd go bankrupt pretty quick. And of course, the U.S. is bankrupt. So I just want to set the scene. Retail's decimated. A lot of corporate restaurants in the tubes. Level credit card debt. A lot of uncertainty. Groceries cost a lot more than what they're telling us. Energy costs are up. And there is an overlay kind of malaise. Some of these people are getting, assistance on food that are working. These people, some of them have 2 jobs and they still can't make ends meet. Sorry, carry on, but that's the truth. That's what's going on. We are in a recession. And I put on a Twitter feed yesterday, look out, we might be going into the big D. I hate to say it, but this could be a depression in 2024. I don't want it. But I see it. The trend is there. The trend is not a soft landing or a recovery. The trend continues to be a contraction in the economy across the board, China.
I think you spelled that out really clearly. So thank you for doing that. And, I also think individual people can definitely feel in their lives the things that you're saying. But then, of course, as you mentioned, we have the governments that are looking at different statistics to see what they want to see. Maybe they're looking at indicators that are lagging. So I know that a lot of our audience is also watching closely what the Fed is going to do. So I want to touch on that. And if we're heading toward this recession or even possibly depression scenario in 2024, what do you think we see the Fed do? And what happens to inflation? Because they've been so focused on getting that number down.
Yeah, it's always a tough call on the Fed. I mean, a lot of my peer group have thought that we would see the Fed pause and then lower interest rates by now. They haven't. They have paused. I think that there's another raise or 2, perhaps. I don't know. I know what I think all of us, and that's this. This is the thinking of the alternative media, the, free market thinkers. Once the Fed pauses or lowers, that's kind of signaling to the market that we don't care about the value of the dollar. And once that happens, then it could be a race to the bottom where people just start selling dollars and buying gold as an example. That's just a quick example, but it would be further depreciation of the dollar. We don't care. Remember when we had the zero interest rate policy, if the interest rate on something is 0, it's not worth it. That's the truth. But everybody, I should say, many in the financial community took great advantage of it and arbed it between different countries, borrowed dollars for 0 to the country to get. There's a lot of stuff. Plus, it can leverage. So even if you're getting 0.5%, if you leverage 10 to 1, that 0.5% goes up tenfold. So you're getting 5% back in the day when it was almost 0. Anyway, I am fearful about what happens when interest rates get lowered. I don't think it's going to help. As far as inflation, one thing I want to talk about, and thanks for bringing it up, that very few do, is the psychology of inflation. And I've read enough of these books back here on, the death of money, the penniless billionaires. I mean, I could go on and on. The point is that it's a psychological move as much as a depreciation of the currency, because what happens is you're there working at your job and you say, you know what, my grocery bill's high, cost me twice as much for transportation. I'm not saving anything anymore. I need a raise. So you get a raise of 30%. You feel good. Your boss is in line with it. He wants to keep you do a fabulous job. And then that goes into, the next item. So you need some plumbing fixed or whatever. The plumber says, well, she's got a raise. I need to get a raise. And then he raises because, it's only fair. I mean, I need to stay with the cost of living too. And the psychology takes over and people usually overcompensate. So if the plumber's gone up 30%, then when the mechanic sees that his bill is up 30% for the plumber and the plumber comes in to get his car fixed, he ups it to 40% because he wants that buffer that he doesn't want to be left behind. And once that psychology takes place, it's really hard to stop it. And it's so ridiculous what the politicians will do. I mean, Gerald Ford had win, but whip inflation now. You wore a button. Like that's going to do something. I mean, put that in a cartoon show, you'd start laughing. But here's the president of the United States with the whip inflation now button. Like that's going to do something. They could put on price controls, which they probably will do, which won't work, which only causes greater shortages and more fear in the market. And I'm sorry I'm ranting and I feel like Mr. Fear, but honestly, you've known me for years. I'm a straight shooter. I'm just trying to tell exactly how it is. I'm not trying to exaggerate that much. And it's going to be uglier, I believe. I'm afraid we've got to go to the bottom some type where the market starts to clear out. Okay, the bonds are always going to be at least 5%. And so we've lost this much on the long end of the yield curve. And if those bonds will be worth what their par, 30 years from now. But if you need to sell them, you're going to have to sell them at a discount because that's life. I don't know if we'll get there. I do think the Fed will throw in the towel. I do think they'll start to lower. And that, I think, could be a worse scenario than having high interest rates, believe it or not. Because if we crush the economy, if we push hard down on the economy and flush out all this malinvestment and take the pain, then we could come out and rebuild on a good foundation. I don't think the Fed is willing to do that. And it's hard on everybody. But if you go the other way and ease up and kiss the boo-boo and make it better, then the currency basically goes in the toilet and you can't trust it. And you have even a worse situation because that inflation psychology I just mentioned starts to catch fire and you can't stop it. Would we go into hyperinflation in the United States? No. Well, we could get to a point where it'd be close enough that we'd see real big dislocations, more than we already have.
Yeah, we have spoken for years at this point, and I do know that you're not an alarmist. So when you do have concerns, for me, that means it's time to pay attention. And I think one point I want to follow up on. So for me, in the conversations I've been having in 2023, de-dollarization has been a big theme, and I've heard quite a range of opinions from, we're heading toward the death of the dollar, or this is not something to worry about at all. So I wonder, where do you fall in that spectrum? And I'm interested to hear also how de-dollarization could actually play out, because I think it's hard to visualize or imagine.
Yeah, it is. I just digress for a second. There was a guy in Australia years ago, and he called it, the dollar's never. Dollar's always going to be there. Anyone that says that doesn't know what they're talking about. And kind of, he didn't know he's talking about because all fiats, all fiats fail, but failure doesn't mean absolute zero. The dollar will not go down, but it will be mitigated more and more. De-dollarization is a good word, Charlotte. That's what's happening more and more. You're seeing more and more of the BRICS nation trade currency to currency, and that will continue. That trend will. So the system needs to be reset, and it will be, I'm pretty sure. But how will it be reset? And that's the biggest question, because are the banks really prepared to move over to a CBDC across the board? How much resistance will they get? Probably quite a bit. Is the crypto market solid enough, secure enough, financially stable enough for to take up an alternative monetary system? And I would argue probably not, because a lot of people in my age group They don't even want to bother with it. It's too cumbersome. It's not easy. It's not like you put an app on your wallet, press a button, like, or on an asset backed it, or, one that's just got a name to it, like Dogecoin. It's not that easy. Plus, it is centralized. In most cases, you got to go through an exchange. And that means they've got your name and your number and all that stuff, which is, your choice. It's not that private is what I'm saying. The idea was with the origination of Bitcoin was it was anonymous. You kept your anonymity. It was peer-to-peer. The banks weren't involved. You your own bank. Everybody. That's morphed into something very unlike that now. And even with Bitcoin, it's got more qualities that a lot of people admire because the government really can't shut it down. But I just had real life experience with one of our guys that moved, was a kind of a whale, and he moved a lot. The transaction took a very long time. And what was a real shocker, Charlotte, was the fee involved was quite large. And the idea was that, we can move millions for pennies. That we don't have these exorbitant fees like the migrant workers in America that send money back to their parents through Western Union. They get scalped really bad. I don't like seeing people take advantage. That was the only way they could get money back to Mexico. And so with crypto, you could send the money and the money gets to your parents, and there's a very small, almost frictionless system, meaning no fees. And that's true in some cases, but it's not true in all cases. So I'm not saying the crypto experiment's a failure. It's not. But as time has worn on, we've learned it's not everything that it was purported to be. It's not anonymous. It is third party in many cases. Transactions on some of the bigger, well-known cryptos is slow. And it's not that, the adoption isn't that big. I mean, if 80% of the world was on a crypto right now and the banks failed, I'm not a big crypto fan, as you know, but I'd still be cheering because, hey, we've got a system of the people, by the people, and for the people, which is what I would, right? But that's not it yet. It could be, but I think we don't have enough time. I think you're going to get forced into the new system and say, if you want to pick up your check from the large corporation you work for, you either get into the new system or you're not getting a check. That kind of thing. It's voluntary, but if you don't volunteer in, you don't get your weekly check. That.
Exactly. And yeah, since you mentioned central bank digital currencies, I was going to bring up a report recently that came out from Canada's central bank, where I don't know if you saw it. It was essentially they're reporting on sentiment around the idea of a Canadian central bank digital currency. And they've gone out and spoken to people. And the gist of it, from my understanding, was they're saying, okay, we understand that you all feel nervous about this and you don't really like this idea, but we are going to proceed with it. So I kind of laughed a little bit, but it's not really that funny. So any other thoughts there?
Yeah, a couple. One is there has to be, the system is failing pretty rapidly. And so the new one has to come on board here rather rapidly. What you said reminded me of a speech I did see with Christine Lagarde. And she said, the digital euro is in work, how all the benefits of it, but we will keep the cash. You will have cash. Well, we have a joke in the alternative financial media, our financial newsletter writers and others. And whenever the government or a government official or NGO type says they're not going to do something 3 times, you're guaranteed that they will. So she said at least once or twice that they'll keep cash. So she says it one more time. We know they're going to go.
That is kind of, again, funny, but not really that funny to look at there. So what I also want to ask, so I had a couple of things that I wanted to go through with you. So we touched on those. We were talking before we turned the camera on about how really there's so much news going on right now. It's hard to keep track of. And I wanted to put it back to you a little bit and ask you, are there topics right now that you think that people should be noticing that they are not noticing right now?
I do. I think number one, I don't talk about it enough. I'm not real studied in it, but I'm I'm a student of the markets. And, the world runs on energy, not on dollars. I mean, everyone says money makes the world go round, but really energy makes the world go round. So I'm not a huge uranium guy. We've got a couple of uranium picks in our in the Morgan report. Both are doing pretty well. But I was really a fan of SMR, small modular reactors. I thought, man, this is the way to go. I mean, they're safer. You punch them out like Toyota, the smallest car, just, bang, bang, bang. It gets rid of so much red tape. I mean, it's really a great idea. And unfortunately, it looks like that idea, which is, in my opinion, a very good one, has been put on hold because the SMR market leaders basically have quit producing. They're not, they don't have a profit margin. So that could set that back for a while. And that concerns me because, again, 20% of the country runs on out of the U.S., runs on nuclear. Every one of those nuclear facilities, with exception maybe one, is so old that it needs to be decommissioned very soon. So what happens when oil's at $100 and all the nuke power that you had goes away? So you need 20% more power, and it's not available very easily, and SMRs are out of the picture. So, again, I know I sound like Mr. Doom. I don't mean to, Charlotte, but, I'm well studied on these topics, and you interview me for a reason, because you want your viewers to understand from different perspectives, different people, what's going on. I'm sure there's some people much more optimistic than I am, but, how many of them brought up that little tidbit of information? 20%, that's 1 out of 5. I mean, think about 1 out of 5 neighborhoods being blacked out as an example. That's a lot. Anyway, I'm sorry, but it concerns me. I mean, times like this, I'll be a little reflective. I feel like I haven't done it enough, right? I mean, first interview we did together, gold and silver are pumping up. Everybody's happy. Everybody's making money. Things look great. We're going to make money and start new businesses or whatever. I mean, we're pretty optimistic from 2000 to 2011. The last decade for me, I saw this coming. Took a little longer than I expected, but here we are. And it's hard to rebuild it's hard to rebuild when you don't trust it. If you don't know to plan for an inflationary environment or a deflation environment, it's really hard to make a business decision like an SMR company. Well, what are we going to do 10 years from now? If we don't know what the dollar's worth now, how can we project how much we're going to have to borrow, what our interest rate will be, and we're going to have to pay it back, what our profit margin will be, and whether the government gets involved and puts a fee on top of every SMR we build? I mean, things just get more and more complicated. And the more complicated they become, the easier they are to fail.
Yeah, I'm glad that you brought up the energy situation because that's been on my mind as well. I know we have a lot of uranium fans in our audience, so I'm sure they'll be interested to hear about the SMR situation. One of the things when it comes to energy that I hear a lot from people who I speak to is, we're going to need all types of energy, and it's concerning if we're not going to be getting it. But I want to maybe bring it back to investors and think about, if that's the case, what are the opportunities potentially that people can look at within energy?
Well, on the SMR thing, I mean, that's just a trigger shot in time. There might be some entrepreneurs out there that take that challenge and they come up with one and they do pump them out. So that would be number one. I think anything you can do to help the energy situation. So let's take a real quick thought experiment. There's a lot of line loss when you have these power lines going from point A to point B. So you start out with 100% of the energy, and by the time it gets to the end of the line, you've lost, make up a number, 10%, 20%. If you could mitigate that somehow, and you can with superconductivity, and that's where you freeze the lines and you have zero line loss, but then you have to have the energy to freeze the line. So it's really not a net help. So I think anything along those lines to not, to get every drop of oil to its maximum where we don't have a big loss, right? That would be one. And there are people working on those, by the way. So that's one that's an optimistic view of energy. The other one maybe is just, common sense. Do you have to take a hot shower every time, and does it have to be 10 minutes? And, price usually mitigates those things. That's the function of a true capitalistic system is if all of a sudden your gas bill is double because you're taking those long showers, your wife might tell you, you know, it will mitigate the problem. It'll say, well, I'm going to, shower less or shower a shorter time, whatever. This is a court example, but that's the way the markets really are supposed to work and can work. And so I think it's maybe, I gave the picture the way it stands now. That doesn't mean it can't get better starting tomorrow. I mean, it could, but I don't see enough in the financial system that's solving problems. Everybody's pushing life insurance policies back and forth, or having a high frequency trading system, or an algorithm that makes you money in your crypto if you place it with them. And this is the top of the age of empire where we hit the decadence mode and this opulence, and everybody wants to sit on their butts and make money from each other. And that's not a physical economy. That's a game. That's a gamemanship thing. And so if 40% of the economy is devoted to playing a game of how I can outsmart you and make money by doing nothing other than pushing some buttons, that's a sad, sad, sad state of affairs. And if I could do it at that, in that manner, in other words, voice what I've just said, and hopefully get through to some more people that watch INN and your show in particular, I feel I've done something worthwhile today, because it is not the way the world works in the best form for everybody. Pushing paper back and forth doesn't really do anything. And I'm somewhat guilty. I mean, what I do for a living is look at the big picture, write about it, and I show opportunities. But, people want to own their own business. And if you really buy the right companies, you're buying that company. Yeah, I own stock, but you actually are an owner of that company. I mean, thinking on the startup, if you put in 5%, which is most might be allowed at the time, you're an owner of that company. You're 5%. That's big in the stock, as you know. But anyway, I'm ranting, but I'm concerned. I mean, you can feel it. You said it yourself. I have not felt this where I've seen so few opportunities, whereas before, no matter how murky it looked, I always saw a bright light out there. I'm not seeing that.
Yeah, I think these are very valuable comments that will resonate with a lot of people. So I don't mind at all that we're going in this direction. Before I do let you go, of course, we have to talk about silver. I know we mentioned it a little bit at the beginning of the interview, but silver, I think people will know at this point that it lags behind gold. So if we don't see that move in gold yet, we probably don't see the move in silver. When it does get there, it tends to outperform. This year, it seems like it's been stuck under that $26 kind of ceiling. So just want to get your thoughts on silver's trajectory forward, what we're looking at in 2024.
Yeah, well said. I did put on Twitter, I think we could see 26. I'm going to touch it intraday, but that's probably about as much as we're going to get out of this rally, in my opinion. Gold will lead. If I'm right about gold in 2024 is the beginning of the next major leg up in precious metals. I think we'll see, above 2,072 is the actual number in US dollars for the previous high. And we'll get above that. We'll get 21, 22, 23. I think once we get into that modality, we'll see, I don't know if we'll see $3,000. Depends what happens to the rest of the economy. Depends if they pause and start lowering interest rates. If they do that, that will put a boost to gold, because it means they're going to destroy the currency further than they already have. Probably accelerate, and that inflation psychology we talked about will take hold more and more and more. And then gold will go up and up and up. And then we get what the late, great Jim Dias used to call the my. He wrote about this. So it was, my, gold keeps going higher. My, silver keeps going higher. I think we'll see over $30 silver next year. And once it gets above 33, there's really not much resistance. So silver could really start to spike, catch up, where we see the gold silver ratio go from like in the 80s to 70 to 60, so we might see a gold silver ratio 60 to 1 or maybe even 50 to 1 next year. I'm not forecasting that. I'm saying that I agree with you. I think silver, once it gets going, will outperform. And lastly, I'll just say I did a interview with Dr. Stephen Lee. He's a big silver and gold bull, particularly silver, actually. He writes a newsletter like me. He's from New York. He's not on Wall Street, but close enough. Really a pretty smart guy. And he just pointed out everything that most of us silver nuts have pointed out with the current situation, with solar taking so much silver, the green energy adding to the silver. And the big problem with silver, if you want to call it a problem, is there isn't any institutional investing. And normally when we get this kind of a silver market, you see some family offices, sovereign wealth funds, maybe even a country or two, or a money manager buy into the ETFs. And we're not seeing this time. I think that I'm almost certain that will happen. We think it will happen in 2024. So we have a strong industrial demand, and it doesn't have to be across the board. We could have a contraction in the economy, like I say, so the overall silver need from industry at large, say solar, goes down. But solar's increased so much, it makes up for it. So industrial demand's higher than ever, even with all the other uses diminishing somewhat. Retail probably will come in once we get the MIMIs, because the fear of missing out will take hold of their consciousness, and then everyone sees inflation. And then lastly, you'll see the institutions will almost have to come in. It can't be the big players. Silver's such a small market, but it can be some pretty good size, sovereign wealth funds, or, large trading funds, or that kind of thing, which is enough to really give silver the boost it needs to start moving rapidly and sustainably.
Yeah, I think it really helps to kind of lay out the sequence of events so people know when this happens, maybe this happens next, and on and on and on. So that's really good to go over. I have one final question just before we wrap up. And we've talked about a lot of topics here, lots of good advice for investors. If you had to narrow it down briefly into some do's and don'ts for investors as we head forward, what would you say?
Well, I would say I've written about it in the past. It's called the 10 Rules of Silver Investing. It applies to gold. It really applies to almost any investment, really. And that is, keep it simple, keep it sincere. You don't have to overload into precious metals to be well protected. 10%, probably more than enough for almost everybody. There are other opportunities. And look to, solve the problem, And if you agree with me that energy is the problem, then do your own homework. Find somebody that's very studied in it and you can learn. Say, part of the solution is if I invest with this XYZ, solar company, or this SMR company, or this hydrogen experimental company, or whatever, I'm helping myself because I'm going to plan to make money on it. And I'm also helping society at large, because this new hydrogen-based fuel cell is going to be so much better for the environment and for mitigating the energy crunch that's up ahead, I believe, David. So I think that's the way to approach it. I mean, again, if you just, in a high-frequency trading situation and all you care about is money, 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 that's not it. I mean, I grew up wondering how this world works, and I started to learn it at a pretty young age, and I thought what we call the American system was so wonderful. I mean, if I have a great idea, but I have the money to make it happen, then I get my aunts and uncles, my mom and my dad and friends to contribute money to my projects, and it works. We all make money, and we produce something that the market wants and needs and makes it better. I mean, what's better than that, right? But that's not how the system works anymore very often. Of course, there are things that have come that have made our lives better, and that type of thing. I don't want to be totally gloomy, but yet I did outline quite well that the system at large is more about moving paper around and not producing. That's what you should worry about.
Okay, I think that's a good point to wrap up on. Thank you so much for coming on to talk about gold and silver, energy, all the other things going on in the markets. Always really enlightening to hear your thoughts.
Well, thank you, Charlotte. I appreciate it.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is David Morgan of the Morgan Report. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.